Fantastic. And then let me, I'm doing this in alphabetic order. So from Mauritius, we go a little bit southwards to my home country and South Africa. And we've got Lyle Horsley. I'm delighted to say we've been friends for many years. I've worked at the central bank and Lyle and I, we share a long history. So Lyle is currently the divisional head of the FinTech unit at the SARB. She's worked extensively in the Prudential Authority, a lot on the Twin Peaks framework when it came out, and has extensive experience in the policy formulation and regulatory domains. Lyle, a delightful welcome.
Thank you very much, Arif. Good to be here.
Fantastic. Fantastic. Look forward to hearing from you as well. And then to an old friend, Kombe Kaponda from Zambia. Kombe, of course, is from the Bank of Zambia. He's been involved in the financial markets infrastructure and oversight, as well as, he is the chairperson of the FinTech Working Group at the Bank of Zambia, and also holds a DBA, from his jurisdiction. So, Kombe, delightful to have you as well. Really, really excited to hear about the developments happening in Zambia.
It's great to be here. Nice to be part of the panel. Thank you.
Fantastic, fantastic. So, colleagues, maybe a few prefacing thoughts before we turn to the panelists. I think we've been hearing very beautifully from many colleagues about the legal frameworks, the regulatory frameworks, the oversight frameworks on digital money. And, it reminds me that it's always wonderful to kind of have those overarching frameworks, but hear from participants directly in terms of what they're grappling with, what they're excited about, what the issues are. And so now we'll turn a little bit more practically, I think, to the panel and hear from Mauritius, from South Africa, from Zambia, what the elements are, what the moving parts are, and so on. My own quick thought would be, I bumped into a colleague the other day and he was saying to me, he's about to retire from the fund. He spent over 30 years in this domain in FMI and payment systems and so on. And he said, I'm glad that the conversation is shifting from payments is just the plumbing, to payments being thought of as Marianne and some of the others, Palmer and Tanai have been capturing, Durkian and so on, that this digital money is a game changer. And it's more than just the plumbing. It can have, really important implications to the international monetary system. So as the IMF, we've been thinking very carefully about these shifts around things like currency substitution, dollarization or cryptoization, as they would call it in the GFSR, the impact on gross capital flows as you have access to different forms of digital money, what that might do from a financial integrity, AML, and CFT perspective, and whether central banks need to think about capital account restrictions differently from the past, and whether digital money would make it easier or not. So that's some of the work that's been going on in the background in the IMF. We'll be putting out a paper very soon as well on the impact of digital money and capital flows. But rather than me go down the pipe of the impact on the international monetary system, I think colleagues would be far more interested in hearing from each of you today. So let me turn then immediately, Ashwin, and maybe you can kick us off on the first question. Can you give us a feel of what the current issues are on digital money in Mauritius, excitements, issues, etc.? Over to you, good sir.
Thank you, Arif. Just to check, can you hear me properly? Because I think that
thank you.
Were having trouble hearing me, so I've tried my best to be next to the mic.
Ashwin?
Yeah.
The interpreter says that there is still echo, so I'm not.
Because in fact I can't hear any echo from my side, but I'm as near as possible to the mic. I can't go nearer than that. Are you hearing me echo from your side also?
It sounds fine on this end.
Yeah, my end also.
I'm not sure if you can you hear the interpreter? She was saying that perhaps there's two mics on from your side, Ashwin.
No, there's No noise from my side.
Okay. On my side, I can hear you clearly, but it's just the interpreter. Perhaps if you can just go again and we'll check with the interpreter if that's fine.
Okay, perfect. So Arif, thank you for this very interesting question. I mean, being in payments, we sort of face that on a, I mean, we have to think about the payment strategy of the country, right? And some of the issues we've been facing for the last I think 5 to 6 years is to analyze how we make payments more affordable. What I mean by that is the cost of transaction is too high in the sense that today small merchants find it difficult to accept digital payments, and the reason being the merchant commission is still on the high side. I mean, today we are averaging on 3 to 4%. And you think about a small shop putting a POS and paying 3 to 4% for card transaction. This is very difficult for them. They've been complaining to us a couple of times about it, and we've been following up on that. So probably when we discuss further on the panel, I would come up with some of the alternative solutions that we've been proposing. The second aspect is that Mauritius is becoming sort of aging population. So what this means is some part of that population is not so technology savvy. So as we move into this digital era, digital products tend to be more complex, and that complexity could lead to people being financially excluded. Of course, there are financially literacy programs being set up, trying to bring people there. But one of the aim of digital money was to have that financial inclusion. But then what we are seeing is if our product becomes so digitally complex, then it could actually exclude people from it. So this is one aspect that we are really looking into, especially with the setting up our instant payment system. So that's one aspect that I'm really excited about, which we can talk a bit later. Then we also have within the country the emergence of some fintechs. Now, when fintechs are here, they sort of are becoming a bit, sort of bring some competition in the payment landscape and trying to lower that cost of transaction that we were talking about before. But then as regulators, how do you regulate it? So this is some aspect that we've been considering, and we have actually brought out a new framework for that, which we can definitely discuss further. And then as we move into that digital payments, some of the other aspects we've been seeing is frauds, scams. And we've seen that some of those are coming from overseas. So we can see a lot of social engineering going on. And in spite of all the measures that some commercial banks are bringing into, we're still seeing that people are not so cautious. And this is bringing some, what we are scared about is that people could lose trust in the system. So this item also I could touch a bit later. And then probably our central banking, one aspect that we are really much concerned and is at the heart of our business is to ensure that all our main systemic system is resilient. That's the RTGS. And to reduce that risk, it's important to actually have the right infrastructure, especially nowadays that we're moving to the ISO 20022. So it's very important for us to think about how we make it as resilient as possible from an infrastructure perspective. But also what we've been doing is to decrease the load of low value transaction from that system and shift it to retail payment systems such as the instant payment system, our bulk clearing system, which combines electronic fund transfers. So those are, in a nutshell, some of those issues we are currently facing, which we are sort of analyzing. And we have come up with some aspect of it, but I don't want to monopolize the floor. So I'll leave the floor back to you. And probably we can then follow up with question, or we can discuss further on some of those items.
Fantastic,
Over
fantastic.
to you, Ari.
Thank you, Ashwin. I think you raised four really important matters. You know, the cost and the frictions related to low value payments, especially for hard to reach consumers or hard to reach merchants. But the importance then of having very easy user interfaces, especially given an aging population. But it sounds like you see, you know, new fintechs playing a key role in increasing competition in that domain. But how do you make sure that the frameworks support that? And then, of course, the most important one is resilience. So we'll cycle back to you to understand these kind of trade-offs a bit more deeply. But let me turn south again and go to Lyle. And Lyle, we'd be delightful to hear what are the key issues for South Africa. Thank you.
Thanks, Arif. Yeah, so I think from a South African perspective, there certainly has been growth in technology and smartphone penetration. And I think that has accelerated innovation in the country. So you'll see things like Apple Pay, Samsung Pay, Zapper, SnapScan, multiple innovations. I think the concern is that these innovations are typically taken up by your higher income consumers and your tech savvy segments of society. There's also, I think, a concern around a lack of interoperability across the use cases. So I would have to have multiple apps on my phone to use, you know, a number of these innovative products. I think just on the e-money perspective, so in South Africa, I think the regulatory regime for e-money is a little bit constraining. E-money is seen as deposit taking. And so I don't think we've seen the scale of e-money issuances that you would see in other jurisdictions. And then I think uniquely, or maybe not so uniquely, but maybe surprisingly, is the high cash usage in South Africa. So while 80% of the population does have a bank account, the dominant means of payment is still in cash. So I think there's a stat like in 2018, 52% of total consumer transactions were in cash. And I think that presents an interesting challenge for how to innovate and how to harness fintech to drive a more inclusive financial ecosystem. And then I think another interesting discussion is around the incumbents. So we hear a lot that the incumbents will be disrupted and, you know, intermediation of the incumbents and so forth. And I think that is true. But what we are also seeing is that, as a colleague of mine said, the banks won't sit back and have their lunch eaten and do nothing about it. They will also innovate, and they are innovating, and they are partnering with fintechs. They are buying up fintech companies so that they can continue to present a value proposition to their clients. And so I think it's interesting to see the way the banking sector is coming together through something like the Rapid Payments Program to allow for instant payments, peer-to-peer payments, and so forth, and how they are responding to that innovation. We are also seeing private forms of money, not from the commercial banks, so coming out of, you know, this unregulated private money in the form of a ZAR-backed stablecoin that was issued, which is not the first stablecoin that was issued late last year, but it is the one I think that received the most kind of media attention. And that does then prompt us to consider the legal classification of a stablecoin and unpacking the regulatory and policy implications around stablecoins. And I think when you have this innovation and disruption, it does then prompt a question. Well, what is the role of public money in a digitized or tokenized world? And so the central bank itself has had to, I think, look into those areas through a retail CBDC, which is something that we are currently exploring, and we are undergoing a feasibility study, and wholesale CBDC as well, which we are exploring through Project Corca 2, and then a multi-currency CBDC, which we are also exploring in work with the BIS. And I think from just initial reflections, it's very clear that the technology can do amazing things, but we sort of get stuck when you get to the legalities and the policy imperatives and the frameworks that need to be put in place to support that kind of innovation. So yeah, I think we at early phases of that work, but it's raising interesting questions. I'll pause there. Thanks, Arif.
Fantastic, fantastic. So what I take out, Lyle, is that there's a lot of innovation going on. That's where you started, right? Zapper, SnapScan, rapid payments. There's a whole lot of moving parts, right? But what you're concerned about as a regulator often is just how do these moving parts interconnect? Because we know that payment systems and so on, it benefits from allocative efficiencies, efficiencies of scope, scale, and productive efficiencies, and so on. And in that mix, you're also thinking about e-money and thinking about whether you need to shift in terms of your policy stance on e-money. If I recall correctly, it's the business of a bank. It's considered to be deposit taking. But you also contrast that very nicely to still this high dependence on cash, right? And the role of incumbents. You captured it really nicely that they're not going to sit back and as you captured it, let someone else eat their lunch, if you put it that way. But there is this competitiveness, based on the efficiencies that you require as a regulator that would be quite stimulating for the market. But you also point then to the tensions of, well, this is more than technology. It's also about how you think about what you can be doing as the central bank. So these very delicate, careful calibrations around thinking about retail CBDC, wholesale CBDC, etc. But you point out very nicely at the end that this is not a technology discussion. This is actually a policy discussion and understanding the better role of the central bank. So I think both you and Ashwin have given us very nice feels of what the main kind of matters are. I'm delighted to turn to Kombe. Kombe, my cat is doing something strange in the background, so I'm just going to put my camera off, but I'm listening very carefully. I just don't want her to do something crazy. I apologize for this. I'm just going to put my camera off, but I am listening quite carefully, Kombe.
Thank you, Arif, and thank you very much, Lau, and all the other previous speakers. I think from the Zambian jurisdiction, it's more or less a little bit similar to what's happening in the whole of SADC. And for us, mostly we've seen the evolution of mobile financial services. Mobile financial services in terms of the 2G technology, which we're still using up to now, starting from the 2G, 3G, 5G, and I think all the mobile providers are making sure even the old technology is still, is still being used by the whole public. And that way you find that even your traditional SSD code can still be used. And that, I think, has helped us look at things differently. The recent FinScope survey of 2020 showed an increase in financial inclusion, and I think mostly that was due to the mobile financial services. We saw a jump of about 10.1% from about 59.3 percentage points to 69.4, and that was great. That's still growing. So we've seen, a kind of use cases on mobile platforms, both on USSD platforms. We've seen it on applications, on smartphones. So that way, I think in terms of the usage, it doesn't exclude a lot of other people. I think for us, we've been dealing with issues of literacy, where the market is trying to make sure the design of these applications are easy and seamless. If it's USSD code, make it easy. If you have to make a payment, it's 3 steps. That way, even my grandmother and the remote can be able to send and receive money. I think we've seen that. Coupled with that, we've seen a second launch of the National Financial Switch. And I think that has revolutionized the way payment systems are done. We now can move payments from bank accounts to mobile and vice versa. And I think that's helped quite a lot. There's still issues of interoperability, same with like Lau said, where if you want to move value from one platform to another, you probably have to go through 2 steps. You have to use 2 different apps. But hopefully, in terms of going forward, we hope we can break that barrier. And that way, we'll make sure we can move value seamlessly, frictionless from one part to another. And coupled with that, we're excited about, the regional payment systems platform. I think Lau can shed more light on the SADC RTGS. We were hoping, that can also help us with the high value payments in the region, enhance trade, and that way, we can leverage on already existing infrastructures. In terms of fintechs and what's happening in the CBD space, most of it is just research-based. We've been doing a lot of research looking at the motivations. And I think the main motivations that are coming out is what are the major use cases of these platforms? Do we really need them? You look at you know, how do we enhance payment systems efficiency? Can that be a use case? You look at obviously a stronger national defense against AML and CFT, issues of currency processing, and I think based on that, you know, we're watching the space and seeing if we really need to move into that space. But at least there's been a lot of research, and for us, in terms of mobile financial services, they've done great. So any innovation, innovation, fintechs are running towards that, and that's what mostly all the regulators are pointing towards. And I'm happy to state now that we've seen a lot of collaboration between different regulators. You know, we have technology regulators that are regulating the actual payment systems rails. You have the financial services regulator, you've got your financial conduct authorities, pensions and insurance authorities. We've seen those coming together and trying to mitigate, especially issues of cyber risks. Because I think we've seen scams in the market, we've seen social engineering in the market, and we're trying as much as possible to educate. We're trying as much as possible to make sure the customer, who's the most important component, is protected. Consumer protection is key, and ultimately making sure these mobile payment systems platforms are trusted the same way the good old cash is trusted. I think I'll end there for now. Thank you.
Fantastic. Kombe, once again, you draw out really well what the dynamics are in Zambia, and very similar kind of issues in terms of deepening financial inclusion, you know, the concern around literacy. You talked a bit about the ability of moving stuff between mobile, between mobile payments and account-based payments. And I'd love to hear a little bit more as to how you guys managed to achieve that. But you also point out that there may be some interoperability issues as well. Interestingly enough, I think you draw a new angle on matters, two that come to mind. The issue of cybersecurity is really top of mind for you, including some of the financial integrity matters. So I'd love to understand a little bit more about what you're thinking about in terms of these trade-offs. But let me do this then. So I'm going to turn to each one of you again, and thank you for painting this picture. What would you say then are the big policy trade-offs, right? So often it's, I want to achieve this particular goal from a policy perspective, but if I pursue that, you know, it sounds great. I may be addressing, as Kombe said, you know, the ability of bringing really products at your fingertips at ease, even for my granny, a few clicks and it's done. But I might be trading off with other policy objectives. Can you give us a flavor of what those trade-offs are? Let me turn again to Ashwin, then Lyle, and then Kombe.
So, Arif, there's two things I actually looked at. First of all, can you hear me properly? I'm trying to use the mic now so that there's no echo. So the first aspect of it is the regulatory framework. As regulators, so if you have fintechs in your jurisdiction, so you need to have an enabling regulatory framework in order to promote the development of digital payments. By having that type of framework, you provide a sort of fair and equitable access to the payment system infrastructure. Now, this is from a policy point of view. But then from a being, as you rightly pointed out, being technology oriented, I think there's also what we call the hard infrastructure, which is also very important. What I mean by that, and I think Kombe rightly pointed out, interoperability. I mean, even if you have an enabling framework, but then you don't have the infrastructure in order to promote that interoperability, then you're bound to fail. Then that's where it's very difficult for new fintechs to actually make a move and sort of compete against the incumbent. And this is where the central bank in Mauritius especially, we played a big role in that, in setting up the national switch. So I'll give you an example, mobile payments. At the time in Mauritius, mobile payments were just private initiative, and only commercial banks had mobile payment facilities, and that was within a closed loop. Then came some MNOs, but then the problem with MNOs, and I think Lai mentioned about it, in Mauritius also we are 92% bank population. So people don't have that concept of going for e-wallets or having to go with an MNO. They're happy having a bank account and they use their bank account. So the issue for the MNO is how to get people on board. I mean, people don't want to carry their cash, even though we are a cash society in terms of payments. But people don't like to take their cash out from the bank and then deposit it in an MNO, you know. So then this is already a sort of interoperability issue. So what we did was to set up what we call the instant payment system. And in that instant payment system, we've put what we call the open banking facility, which means that all commercial banks have to open up their core banking system so that irrespective where a customer is, he can access his account, makes debit and do payments. So those are two aspects that have really worked to sort of bring that competition. And we've seen that transaction for the mobile instant payments been live since 2019. We've already seen like a 300% increase in transaction. And that's with certain commercial banks not having their whole outgoing transaction going on that infrastructure. So we've seen there is a demand for that and people want those new types of payments, you see. Then the second part is, you know, when new fintechs are coming to the country, sometimes they need a platform in order to do their testing, to prove their work. And this is where we are working on having what we call a digital lab, so that they can come and with the regulator, showcase their products so that we can accompany them and provide them the necessary guidance so that when they move for cases where there's no actual regulatory framework for them, we can guide them so that when they move out from that, I mean, they would be in a digital lab, then move to a regulatory sandbox. But then when they move out from that regulatory framework, at least we will have a framework in order to accompany them. So this is some of those aspects we've been working on too. So I'll leave the floor for my other colleagues to comment.
Thank you. So what it sounds like to me again is this tension between competition and efficiency, right? And what you point out is that there are probably two key components and one subcomponent. A key component is thinking through your regulatory framework and making it as open and accessible to new innovators as possible. But at the same time, you also called it hard infrastructure. Apart from having hard law, you also need hard infrastructure. And you talked about the ability again then to have mobile payment services interoperable, you know, between accounts and mobile wallets and so on. But a third component is where innovations you know, may not be in this kind of open banking space as you described it, but challenge those particular legal frameworks. You also need a platform, a lab, as you called it, a process that allows people to innovate and for the regulator to keep close to it. The tension then, it seems to me, is again between competition and efficiency, or you know, access and efficiency. So thank you for drawing that out. Lyle, do you have competing thoughts? Do you have complementary thoughts on this one?
Yeah, I think complementary thoughts, Arif. So I think for me, one of the big trade-offs are between, you know, the primary mandate that you have, either as a central bank or as a prudential regulator and so forth. And then you have these competing ancillary objectives that you need to achieve. So financial inclusion, competition, transformation. In the South African context, transformation is quite a big one. And so it's, you know, how do you how do you balance these two things? Because sometimes you could bring competitors into the landscape, but that then creates some unintended consequences. So what we've seen, for instance, we have a number of these alliance banking relationships where mobile operators partner with banks to provide customers with a particular service. And that's great. It allows for competition. It allows for cheaper access to financial products. But then you must still say, well, who's actually supervising the arrangement? And do we understand what the risks are that flow within that arrangement? Not just to say, there's competition and everyone's a winner. And I think a second one is, how do you allow for innovation, but not be constrained by this idea of same activity, same risk, same rules? Because sometimes it's about just actually creating a different bucket, right? Not everything can be forced into the buckets that we have. Sometimes it's about let's create a new set of rules. Let's look at a different bucket. So yeah, that's also sometimes a challenge because we tend to want to regulate things that we know and the unknowns in the same way as the things that we do know. So yeah, those are like two big ones. Thanks.
What you remind me of is, if all you have is a hammer, you tend to only see nails, right? So this tension of, are we looking at the innovations that are emerging only through the lens that we're so familiar with? These are the regulatory frameworks. This is how we define particular activities. And I think you're encouraging broadening that perspective, which increases the tensions. But I suppose that's what regulators have to grapple with. And then you draw out very nicely again, Lyle, that some objectives are primary, right? Like for a central bank, it would be about financial stability, price stability, etc., and not diminishing the other objectives like financial inclusion and competition and so on. But one has to be on guard, if I could put it that way, or be aware that there are these primary mandates and potentially supporting mandates, and how do you balance the tension between those? So not an easy job for central bankers by the looks of it. Kombe, if I turn to you, my good friend, what do you think? Are you supportive of some of these thoughts? Do you have additional tensions that you'd like to draw out?
Yeah, I think very supportive of what's happening in South Africa and Mauritius. But I think just to add on, I think in our jurisdiction, what we've seen is a strong need for a lot of collaboration, both interagency and intra-agency collaboration, starting from the national payment system strategy, what the government is trying to do, what the central bank is trying to do in terms of their strategy, what the Securities and Exchange Commission is trying to do in their strategy, the technology regulator, consumer and competition protection regulators. And for us in our space, what we've seen is, we're all trying to pull into the same direction, but probably at different phases. So where, the technology regulator wants to come up with, tech hubs and hackathons and sandboxes, while as the other regulators is slightly behind. But I think we've seen collaboration where we try to make it interagency, where each agency sits on each other agency's initiative. But that way, even in terms of strategy, in terms of policy formulation, you align somewhere, because ultimately, even as you provide these financial services, your most important component is the customer. The customer has to be protected. The customer has to be able to use these services easily. And for us in our jurisdiction, even the literacy level is coming. So we have to make sure even the interfaces are easy to use, and everybody has to pull in the same direction. Coupled with that, if you're dealing with securities, now we're talking about virtual asset service providers. These are somehow intertwined. So in terms of interagency and intra-agency, that's key for us. But coupled with that, also, you want to make sure you harness everything that's good about these financial technologies, but ultimately, mitigate the risks. And obviously, as you mitigate the risks, that way you make sure your end customer is protected. All the other cybersecurity issues that come with that, you don't want a lot of fraud cases. Once those come up and people discuss them on social media, people will shun away from using these services. So you want to harness the good technologies which allow easier onboarding, easier transaction, seamless, people able to pay for their goods and services in the comfort of their home. But coupled with that, these have to be have to be secure, have to be properly controlled and regulated. And this only happens if there's interagency collaboration, where you agree on policies. Even when you're coming up with certain policies, they have to align with what the national strategy is trying to do. And ultimately, because you have to trade with the region. And now you have to talk about cross-border. And in cross-border, that's where issues now of standards come in. Standards, protocols. If I have to interconnect my national financial switch with another national financial switch in the region, they can only speak if the standards and the protocols are aligned. And for me, that's where the big issue is. When we meet like this and talk about what's happening in the region, we have to at least agree on the standards. If we agree on the standards, we agree on the protocols, even as we build on that, you find that even interoperability becomes easy, because Seamless will integrate and try to move value now from Cape to Cairo easily, seamlessly, and bring about the much needed financial inclusion. Those are my thoughts.
Fantastic, fantastic. This is a super important point, and maybe I would love to hear again from Ashwin and Lyle on this you called it interagency as well as intra-agency, right? Like making sure you collaborate within the organization and then also between organizations. And this makes a lot of sense, because maybe back to Lyle's point, when activities are not so clear to define, you could find, like in some jurisdictions, one regulator defining a particular innovation in a certain way, another doing it in a different way, and then there's completely contrasting approaches to these. We see that in some of the jurisdictions, especially when they are not overlapping mandates, but competing mandates, right? And this ability to collaborate domestically is really super, super important. What are your perspectives, Ashwin and Lyle? Apart from the tension of understanding the trade-offs in policy, the ability to work together is quite fundamental. And I'm guessing not just at the domestic level, but also more and more, at the international level. Very recently, we had a blog put out by Tobias Adrian, our director at the MCM, for a call for greater coordination, on crypto assets in particular. What do you guys think? Maybe turning to you, Lyle, and then to Ashwin.
Yeah, Arif, I completely agree. I was nodding as
Yes.
Kombe was speaking, because I think it's critical. Crypto, it will cut across a number of areas. And so it forces us to be collaborative. Otherwise, we will send competing signals out to the industry. So because there are tax implications, there are cyber implications, there are data implications, we need to be speaking to other regulatory agencies. And then given the cross-border nature of it, it's absolutely critical that we also then coordinate and collaborate within the region and then globally as well. So absolutely couldn't have said it better. Kombe hit the nail on the head with that one. Thanks.
Right. All right. Thank you, Lyle. Turning to Ashwin.
Yeah, I totally agree with both Lyle and Kombe. Even in our jurisdiction, this is a very important component. So in the financial sector, so we have two regulators. So we have the FSC and we have the Bank of Mauritius, and we regulate two different types of activities. But some of those activities actually sort of intersect between each other. And what is lovely about it is we call a memorandum of understanding between those entities, and we meet each other quite often in order to discuss how we could tackle some of those regulatory framework, because this is very important, because some of our regulators have to be regulated by the other regulator. And if they have a different type of framework, for instance, as central bankers, we tend to be very sort of rigorous in the way we regulate entities. And if they find that there's more, let's say, it's less rigorous on the other side, they come and complain to us. And, it should be aligned. And this is where we're coming up and aligning ourselves. And talking about that regulatory framework sandbox we were discussing about, we are actually working together on that path. And we are actually setting it up together. This is a first. So basically, people won't even know they are dealing with two regulators. So that would be seamless to the fintech companies. And it's between us that we will then decide who is more relevant with respect to those applications. So I think really Kombe made that point, and I totally agree. I just wanted to just add two more comments
please, Ashwin,
when I was listening. And one of those aspects is that as regulators, we also need to recognize that we are not commercial people. You know, we don't understand the commercial to the extent that our fintech or commercial bank have their product. You know, and from technology point of view, we are not also that technology advanced. I mean, you know, Kombe mentioned it yesterday when we were discussing, and I really like the wording he said. Nowadays, central bankers need to get their hand dirty. And you know, I am a person who really like. You have to experiment in order to understand a product. I don't think that just reading, talking would make you more knowledgeable about a topic. You need to test it, see it yourself. And this is where, you know, we have to have that listening ear. And I mean, at the Bank of Mauritius nowadays, we meet a lot with fintech, our commercial bank, to listen to the new product, to understand their new product. And we ask them to come and test it. We will do it together and see how it works. So for instance, one of the fintechs going live a couple of months, I think in 1 month's time. And before that, he was in a sort of pilot environment where he actually tested the product with us, and we went through this onboarding process in order to see whether that would meet that regulatory framework we have. And, you know, we could guide him so that, you know, tomorrow he doesn't have issues like that. Then I think the third aspect is government. You know, one of our biggest clients, if you look in terms of payment, is government, but government payment is still manual. I mean, you go to government entities, it's very difficult for you to actually do digital payments. And you think about it, we are just promoting and telling, yes, we want digital money, but then you go to do government, any service you get from the government, you can't use your card or, you know, digital. Right. So this is where our central bankers, we can also play a role. I mean, in Mauritius, what we're doing, we're working with the government in order to put in place a sort of infrastructure for the government to be able to accept payment. And this, I think, is quite important in certain jurisdictions. And we hope this project is going to bring Mauritius to a certain digital level.
Fantastic. Thank you. So, you know, again, as I listen to you, Ashwin, I take out that there's almost a humility in the approach as I listen to you. And that humility is at different levels. It's one, how do you listen quite carefully to the fintechs with an open mind? And it's not the usual kind of process for a central bank or a regulator. It's usually, well, here's the law, comply to it. These are the rules. But you're saying keep an open mind, because these innovations, we've got to understand them better. And to understand them better, you've got to have an open ear, right? But the first point that you made is even more profound. What you're saying there is that, you know, in offering services, central banks are not commercially incentivized. And there are commercial dynamics that need to be understood, and understood really well. So I think these are fantastic points. And then the last point you made is really around, well, you know, if you're thinking about government and what does it mean to offer digital money, there has to be almost, again, to what Kombe and Lyle were saying, the seamlessness across, products in the value chain, so that things happen fairly easily. Let me conclude then by turning to the last question, and turning maybe to Kombe first and saying, well, help us a bit, Kombe. If you were giving advice to the participants on this call, given all the things that you were describing, etc., in terms of the shifts in the market, the essence of collaboration, the need for staying open and having regulatory frameworks, the hard and the soft, okay, what practical actions do you think need to be taken forward, either in Zambia or more broadly, and one or two really practical actions that you could leave us with?
Thank you, Arif. I think for me, in terms of practical implications, I think that depends on the jurisdiction, because I think even in terms of technology and how we're evolving, remember we've heard from Azo and Lao that their jurisdictions are predominantly, bank linked. So it depends on the jurisdiction you're coming from. Like I said, from us in Zambia, what has worked are the mobile financial services, because the brick and mortar banking, in terms of the numbers and statistics, you find that only the formal sector, had bank accounts, but the informal sectors, they'll shine away and just keep their money. But I think we've seen mobile financial services allow a lot of onboarding of the informal sector, where people now can store value with some of these fintechs, and then it's easy now to move value to pay for goods and services. And I think that's a model that works. So I think for each and every jurisdiction, you have to have data. You do research and study and find out what works for that jurisdiction. If mobile works, stick with mobile. Do you really need a central bank digital currency? Do your study. If you don't, you probably will need it in the future. If you need it in the future, how will it interoperate? It still comes back to my standards and protocols. So you still have to think forward and see what is working in the jurisdiction, because ultimately it's serving the end customer. You want people to be financially included. You want people to use these, convenient type of financial services where they can, trace their transaction, where they can save, where they can do insurance. But as they do that, even with their literacy levels, how do they do it? If they can do it on a 2G USSD phone with 3 menu items clearly itemized, let that service be there. Don't cut off the 2G. Maintain your 2G, maintain your 3G, maintain your 4G and your 5G. That's where you find that even the people in the informal sectors who can't afford a smartphone can still use their feature phone with their USSD features and still be part of this inclusive, financial services industry. So in a nutshell, what is practical is what works. You have to do your research and find out what works in your jurisdiction, enhance what works. And even as you move forward and embrace all these new technologies, find a way of interoperability. If there's an introduction of the national financial switch in the system, how would that, connect, the formal banking accounts and the mobile money accounts? If in the future you want to go to a regional payment system platform, how are you going to interface with the other countries in the region? So this is where now the collaboration comes in, both intra and inter. You have your discussions in-house. When you're having these regional discussions, you agree on common standards, and you envision and look in the future and say, if we were to come up with national payment systems for the whole continent, how do we do it? We've seen PASS already coming on board. We hope a lot of jurisdiction can get into that. We have payment systems in COMESA. We have payment systems in SADC, in the ECOWAS. We want all those to come together, transact seamlessly using common standards, but ultimately lower the cost of transaction. And I think that is what will add value to our customers and our citizens across the continent. Thank you.
Fantastic advice. So what I take out, Kombe, is that there's no cookie cutter approach. Each jurisdiction needs to look at what's working, what's not working. But at the same time, you raise the very important point of do your research, do your homework, let the data speak, and then you take your action forward. So thank you for that. Let me turn to Lyle. Lyle, what are those practical elements that come to mind? Would you be supportive of some of the actions from Kombe? Do you have other thoughts to share?
Yeah, I mean, I love the idea that Kombe mentioned about a technology regulator, I think it was. I think that's very interesting. I would set up a technology regulator in South Africa as well, and that's really focused around fintech and technology in the financial sector. But also for me, Arif, it's about two things that we currently are doing in South Africa, but I think we can do it better. This idea of the interagency collaboration, I think it's absolutely critical. So we need to get better at it so that we are kept informed around the developments that various regulators want to undertake. And I think the product only gets enhanced when you collaborate with other stakeholders. The second one is around the sandboxes that we currently do. And I think that's quite an innovative thing for a central bank to be testing new products and testing regulatory parameters with the sector. I think that's quite revolutionary. It has, you know, it's never been done before. But again, I think it's something that we can deepen. It's something that we can look to do, you know, with other jurisdictions. You know, South African Reserve Bank and Mauritius or Zambia doing a sandbox together. I think that kind of collaboration is really something that we can look to do. And as the central bank, to acknowledge that we are not innovators, but we must create the platform for innovation to take place. And we must create the infrastructure that allows the private sector to do what they do best and to innovate on top of that in a way that drives the public objectives that we want to see: financial inclusion, cheaper, faster, safer payments, and so forth. Thanks.
Fantastic, fantastic. I used to have a line, Lyle, which I'm not sure is interpreted correctly, but I used to say often, interoperability starts off at the human level. You know, sure, I agree with Kombe, there's standards and so on, but the starting point is human beings coming together to say, hey, we want to do this for the greater good. And what I'm hearing you say is, even in the regulatory community, it's quite important to have that mindset, that attitude, and so on. Fantastic, fantastic. Thank you for that. Ashwin, let me turn to you, sir.
Yeah, thank you, Arif. I think Lai just opened a sort of invitation for us to do some testing on the regulatory sandbox, and I'm quite happy with that. And definitely, that's something which is very important, I think. I mean, you know, BIS is doing a lot, and if you look in the Asian region, there's a lot of projects going there where a lot of central banks are going. But then when you look into Africa, we don't have that many testing ongoing between our region central bank. We have a lot of initiative being taken by the AACB, but we sort of stuck on the theory. We haven't really mixed up our platform interconnecting and testing, you know. And I think I really like the comments from Lai, and I think definitely we'll get in touch with on that. So this is the point I really liked about them. As I mentioned, so you get your hand dirty is very important, you know, with blockchain, DIT, those type of technology. One aspect I wanted to touch is digital onboarding. You know, in Mauritius, that's something, you know, we talk about digital money, but if the process is not seamless in terms of from your onboarding to your payment, I mean, it defeats a bit the purpose of having the digital money. And here, I want to emphasize, you know, within even the African region, the digital onboarding is not so unified, you know. So tomorrow, if we interconnect the different domestic switch, we may have certain issue, and this is where it's very important that we have the same type of level of framework for digital onboarding, so that we can trust each other on that. So in Mauritius, we're working on a sort of digital onboarding framework in order to allow people to onboard, and this is being supported by the government because we have the necessary infrastructure in order to go and check information through the civil status database. The second aspect I wanted to touch is, you know, from a regulatory framework. So we need to be a bit more proactive. You know, technology moves too fast, and sometimes our regulatory framework doesn't follow. And this is where it's very important for us nowadays as central bankers. We start to be a bit more proactive, even from our supervision department, that they start being, you know, you can't wait for the technology to come in your jurisdiction, and then you start thinking, oh, how would I regulate it? It should be, you know, we've heard about it. Now, if that comes, what do I do? You know, either you get in touch with other central banks who've been facing that. So I think that coordination, that partnership is very important. Then the third aspect is about open banking. And I think Palma mentioned a very important point yesterday, whereby, you know, open banking, one of the aim of open banking was to create competition. And that meant that commercial banks were to open their system so that fintech players could come into, right? And what we've seen, and we are seeing that coming, is MNOs get access now to commercial bank customers. But what about commercial bank getting access to billing? That's right. Kind of trade-off we're seeing, you know, and this is becoming a sort of unfair competition here. And this is where, as central bankers, we need to really see how from an infrastructure or from a regulatory or from, we need to think about it. And this is something we're really thinking about, right? Now, the other aspect which is quite important is capacity building from a central bank point of view. You know, with those new technologies, it's really important we are always sort of learning those type of technology, but from a practical point of view. And then lastly, the point is about financial literacy. Very important for us to coordinate with the fintech, with the commercial bank, to make people understand the risk and the advantage, the benefit of digital money, but also to be very worried about, you know, because in the digital world, if a system is being hacked or a system is impacted, there's large amount of money flowing out just in seconds, not like you just lose a note of 100 rupees and that's it. Now the effect can be really huge on the system, and this is very important to have that awareness. I'll just give you an example of it. You know, with social engineering, the type of scam we're seeing from social engineering. I'll give you an example of my own experience. You know, my mother last time, she was stolen roughly $3,000 from her card, and she didn't even know about it. And in fact, she did receive an SMS telling her, you know, someone has stolen money on you. I mean, is taking that amount from your card. But you know how on WhatsApp you keep on receiving those messages to become sort of redundant. She didn't take care of that message. You know, for her, right. I think the message was a scam, but she didn't realize that her credit card was actually debited. So this is where we're thinking, you know, people need to have an active they need to participate actively in a transaction, you know, from beginning to end. And this is where I like the Google concept, you know, whenever you change PC, you receive a notification where you have to actively accept that, then you are allowed to be on your email.
Right.
So those are some of those aspect, practical things that we really need to think about as central bankers.
Thank you. Thank you. So a few hashtags, hashtag get your hands dirty, hashtag think about a technology regulator, hashtag collaboration is the new way to compete.